What is up, guys? This is our going to be our market update from NY session. So let's just go straight to the Fed rate decision. So the Fed's pretty much raised rates at a 0.75 basis points, which was pretty much expected from the markets, right? So I have these headlines that I have marked out, which was pretty much like really important for me that I want to share from everything he have said. Especially like right here that I have marked out on gold was the 75 basis points is not something considering, but if the rates are required, they won't hesitate pretty much they won't hesitate to be more aggressive if needed. So, like when the markets started reacting in the ways that we was anticipating with the bearish dollar and bullish equities, as soon as this headline came out, because this was what really was expected, but we just wanted him to say it. So that's pretty much what happened over the whole Fed rate decision. So this data was pretty much priced in already for about months. When we look at the dollar, this was all priced in. And then there's other headlines out there. Pretty much what we've been saying this whole time with the Russia and Ukraine is pretty much giving problems to the economy. So he just pretty much gave us extra confirms on that. Looking at the inflation risk, we already been talking about this whole time. Inflation is way too high for him, but also he's been talking about wages, how wages are rising in a faster pace. So he's having a good input when it comes to the labor market, which is also something we pay attention to. And the demand in the economy is strong. So we just have to pay attention to like pretty much what's going to happen with between Russia and Ukraine. And then also, I'm gonna just bring it over here to the U.S. session headlines, where we had Treasury Yellen. She was a former Fed speaker. That the growth, she has a concern about the growth. Especially how it can impact Europe, and then it could spill over to the U.S. And then right here, COVID lockdowns in China threatens the supply chains. So that's what we want to pay attention to. Is like, how is the situation in China? How if it's improving or is declining? So that's stuff we're going to want to pay attention to for headlines that we want to anticipate. Also put here too the Moderna CEO. There possibly be no U.S. government orders for booster dosage. So like that's like really like a good stock thing. I wonder how the Moderna stock reacted after this. Because the Moderna stock was a boost after just an unlimited supply of their vaccines globally. So maybe this will give Moderna its downturn. But also we know that the COVID situation is rising, but I don't believe China is using Moderna. They have their own vaccines and stuff like that. So most likely this headline would change once we see a rise in cases and in the U.S. economy and other world economies. So what we want to take from this now is that the U.S. is pretty much the heads of the U.S. They like the labor markets, and they don't see concerns with like labor and growth. But that could change at any time. Because we know if China is having a problem, they going into lockdowns. That's going to automatically affect a growth. That is going to affect growth everywhere. So right here we see that equities overall went bullish, and that's just due to the Fed's decision. This is why we had equities rapidly rose up to the upside. With oil, demand is being affected by China lockdowns. So these are like headlines that I got that could impact the oil as well. Sanctions, euro embargo, 6 rounds of sanctions, including banning Russian oil and related services. So this is what's going to impact oil, increase of prices. No immediate deal to Russian oil banned at meeting on Wednesday. So we just want to see that this continues out with, I believe, is Euro, Hungary, and it's like Austria. I believe it's just those three. They're pretty much in line with, trying to see if they're going to continue with their sanctions and banning of Russian oil if they maintain that kind of tone when it comes to Russia. So throughout NY session, we see that the safe havens gave out weakness. especially the US dollar. Again, we know why that happened. This was the economic data that happened earlier in Y session, the ADP, which was pretty much poor. And especially like the ICM, the PMI data came out lower than previous, but as long as above 50 is still it's still good as well. But you just don't want to see like multiple negative um, data coming out when it comes to PMI. And I just left this here because this was the previous, AUD rate decision, because this is still playing an impact in the markets. But we went over this yesterday. Geopolitical, like I put a headline in here too earlier for the market update about that was a headline through Twitter with a possible ceasefire. So I just want to see that actually hit mainstream media and get reactions of how if that's really going to happen. But most likely that I believe that they're still having talks, which is a good sign that we want to pay attention to see how the talks go. But if we see anything like pretty much negative, right? Like when it comes to their talks where the ceasefire is not going to happen and stuff like that, that can really impact the markets in a negative way. But what I'm used to seeing when these markets do play out is once we get a headline where it could happen over London session that Russia and Ukraine talks are continuing now, then it's best to just wait and not try to get into any trades until after we get a confirm if the talks is going to go well or if they don't, or like anything that has to do with the ceasefire situation. Let me just go scroll up. Yeah, so supposedly they have agreed to a ceasefire from May 5th to May 7th. So let's see if we see anything like this happen tomorrow. If we see any of these headlines, that can give the markets, more of a bullish outlook, risk on outlook, with possible more upside in equities, probably more decline in gold and stuff like that, et cetera. We probably see safe haven pairs move down bearish some more. Probably see some more upside in GJ. So I just want us to, just take a mental note of this and let's see if we get any headlines with that when it comes to tomorrow. Yeah, U.S. session, and then yeah, tomorrow, like yeah, that's what's right here. So tomorrow we just gonna have to pay attention. Now's a Bank of England rate decision, which is gonna be at 7. So we also have our week ahead tab, which is right here that we go over. But most likely, I could do something, just so it could be fresh. We do something before the meeting. We could talk about it. But like most likely, the hikes is expecting at 25 basis points. So they are expecting for the pound to raise rates. But again, we just want to see his statement after the actual rate decision. Pretty much what happened with Jerome Powell, because we saw we got a weaker dollar. So we just want to pay attention to his statement to see like if either is he gonna is it's pretty much priced in already. The pound has been extremely bullish. It's the same thing what's happening with the dollar. We got this nice massive upside. Now we want to see if he's going to surprise the markets, or either we're going to get continued breakouts. We're probably going to see if that happens. We're probably going to start seeing some upside within London session. We see some break above the highs, and we're going to probably see some bullish price action leading towards the decision, which could give us, continuation buys to these highs, which is a possible outcome. So monitor this price action as we're in pretty much this range right here in the 4 hour, as we can see, because usually sometimes the markets would start pricing it in and breaking above structure, giving us like an early hint of a possible good economic data or good news, as we're in this range right here. So you just want to stay out of this. You don't want to try to trade it within the range, even if it's in London session. We see that price action is in the middle of this range. It's just best to just wait and stay out, until we get that rate decision, because the markets needs to get confirms that we're just going to continue in a bullish trend. So I would just wait until like see if we get nice closures above these highs, and then we could probably get some retests in the lower time frames. And then if we see like price action like this happens, then most likely is pricing it in for good data to happen, and the technicals are probably aligned with that. And with the rate hike, we possibly can get a spike up. But with his statement, he can say that he has concerns like you're like pretty much the UK is having some concerns from the Russian Ukraine situations is really hurting their economy. And then stuff like that can happen again. And then we probably could see like, the pound start relieving, getting some pressure due to his statement that's being pretty negative. So that's why it's important, like the questions like what happened with Jerome Powell. Most likely he's going to get that, but he could also say it in his statement. So it's best to read it as soon as it come out, because then we could start seeing initial a spike up and then initial reactions from the statement, and we could just start declining because of it. All right, so like yeah, looking at a US 30 now, like even though we had this nice push forward. So I just pretty much want to wait to see what happens between Russia and Ukraine. If we see a ceasefire, there's a possibility we could get some pullbacks to like either of these key areas we're testing these highs, or we're gonna come back, pretty much to this 4 hour support where we see multiple candles and body closures are at this area to look for continuation buys if we get those further confirms if the ceasefire does happen. But most likely, if we see more escalations, I do not expect US 30 to break above 34200. Just looking at how the market structure is over here, we can see that we're testing that support. And as soon as we break off, we have this initial reaction. So I'm expecting just to get a pullback at least up to 34,200. And I'm expecting sells below this area if we have reasons for it. But right now, I don't really want to say, because of as of right now, I don't see this breaking above these highs pretty much right now, as of right now, until we get like an extra confirmed for price to break above. Let me get this out of here. Yeah, so like we had this initial push. So what tends to happen after that is either we're gonna get some price action that is gonna we're gonna get multiple price action candles that's gonna come in within this area. If we look for continued buys, just wait to see what happens after this. Which can happen during London, like mid London session or early NY session. And then whatever fundamentals we get for continued buys, you just want to wait for order blocks and continuation. So we want to see right now either we're gonna get pullbacks, we're gonna get pullbacks to certain key areas and then continuations, or we're just gonna get consolidation. So let's try to identify that first before we decide on an initial reaction that we're gonna take. Okay. But also, like, if I want to take U.S. equities to the downside, I want to see dollar. Um, I want to see the dollar start coming back bullish. So I'm not gonna want to take equities downward yet if we're not seeing dollar come back to the highs. The only way I could see that say that this move is gonna get canceled out is if I see this support around 10, like really at 103. If we see price action come back above 103, and then we start seeing a support form, and then we could look at for continued dollar buys. So this would be like the first initial sign that we're probably not going to see no more of a weak dollar. So let's just pay attention to what dollar does. So we have that scenario to happen, or we have this scenario if the dollar can come back and retest the bottom of this support, or resistance, sorry, you know, um, and then look for pretty much a double top or whatever we could get with price action for continuation sells. So this is going to be a key area for me that I want to watch out and pay attention for to see if we could come back and retest that area. Okay, like that's like price action with gold. So now we're finally seeing prices breaking out of this structure, which is a first good sign that I like. We held this support, and now we have breakouts. But now we just have to, we're still playing this downward trend that we've been holding for quite some time. All right. So I just want to see what I want to see now is that, let me just fix this up. So what I want to see now is that yes, like we formed a bottom and then we had a breakout of this zone and we had the reasons for it now. So we know that inflation is still high. We see that they're still having concerns about it. Yes, they gave the rates to combat inflation, but they're still having concerns of it. So I just want to see if gold will come back to retest this pretty much of 1876, and then see if we can hold that support for continuation buys on gold to at least tag these highs. Especially if we still have uncertainty with the Russian and Ukraine as well. You know, we just want more reasons to get back into gold longs. But like, if we don't get any of those reasons, most likely this whole move is just going to get canceled out. And then we're going to probably just continue to look back to the downside. As if we see price come back below this key area here, then we could probably wave off this bullish move. And then most likely we're going to see gold start to retrace, especially if we see that the ceasefire comes in place. You know, that will probably give a temporary optimistic look for, currencies and commodities when that happens, just to show that it's just in good faith that we're seeing when we see a ceasefire happens, especially if it hit mainstream media. But like, yeah, we still respecting this structure. That's just still like, yeah, it's still just that main concern. We're still respecting that structure. So if I want to get continued buys, I want to see how like these 4 hour candles close really bullish. I want to see like rejections from these lows. And then I could probably confirm that we can hold this support. We got the break out of the structure, and then we can continue to at least tag these highs again. I believe I went over GJ. Yeah, I went over GJ already, but don't mind doing it again. But you see, like in the beginning of the week, we was telling it, this is why we say be patient. Don't rush no trades. Don't get FOMO. Don't feel like you're missing out on anything, because now we plan for Bank of England. We are anticipating for something to happen. So once we could just follow through with that plan, and it's gonna give us a lot of pips. Like it's a potential that we can get a nice trade. So you don't want to mess up your account before that happens, and then your account is drained and you can't take advantage of something that is giving you the opportunity to get money from it. So just be patient, wait for these headlines. Pay attention to the news terminal as well. Like especially like what I want to wait for is for this. I want to see once this hit mainstream that agrees for a ceasefire from May 5th to May 7th. Once we get more confirms of that, we're going to see more of a risk on market. Most likely, we're going to probably see GJ starting to break above these highs. And then we could use that as confirms heading towards the Bank of England decision. But I want to definitely see price action, start to break above these highs first. I don't want to like rush into anything in the middle of this range. And again, it's vice versa, like, because even if we come down, I believe it happened with NASDAQ. Like, we had a support that was kind of like this. And then, we broke below, everybody expecting sells. But what it did was just retest, this area over here. And then it went bullish. I believe it was the same price action. Let me go back. Like, you see, it's pretty much like what happened there. So just be aware of this. Like pretty much GJ, we're in this range, right? And then instead of respecting the support, it came back down to retest that area, and then it went bullish. So that's also another possibility that we could look for as well. Yeah, so like we see that AUD JPY, like especially if we get, I'm just a little concerned about it just due to the COVID situation with China, but we're not seeing as many headlines impacting it so far, because I think it's just because it's rate week, rate decision week and FOMC. So the markets is just going to be paying attention to that, so I would just stay focused. I would just pretty much just wait for it. But I like how, we had a weaker yen because of weaker dollar. Most likely, Marcus was more risk on. So I would just pay attention to this key area on a 4 hour just to see if we get some retests here, heading towards London session, and then I'll probably make a decision for continuation buys at this area too to retest the highs. But if not, we see more of a risk on market, more fears coming in. It's just a high probability we're just going to start retesting this support. But like we have like even though we had this this rate decision, we seeing the movement from equities, we're seeing the movement from the dollar. But overall, don't let it confuse you and make you think that okay, dollar is just going to drop tremendously. Like this is just this, like look at this move compared to this whole bullish run. So we're still in a bullish market now. We just have to wait for reasons to continue the dollar movement. Okay, like so this is what we want to take advantage of, dollar strength. And then like we're gonna probably start taking pairs like EU and GU to the downside. We could take advantage of USD CAD and USD JPY buys once we come back into a bullish market with the dollar. So that stuff I would definitely want to start taking advantage of. US equities, I don't really see anything other than what happened. Like this is temporarily to make US equities be bullish for long term. I just personally just see equities maintaining this range for a very long time until we get a reason for more fear in the market to see a breakout. I personally don't see that happening unless we probably get some shit within China. But other than that, we had rate hikes, we had all an uncertainty with war pretty much, and we still haven't broken that support. So what do we need for price action to break this support? So just ask yourself, okay, why? So we know that overall equities is going to be bullish because of this is everybody's pensions, 401ks. This is everybody's livelihood is in US equities. So any downside move is going to get corrected eventually. But the actual initial shocks to the market is where the money could come in for us. So any sort of fear that comes in, like we just take advantage of that. But any questions like was anything confusing, like the whole Fed situation? Was it like, did it make sense? Like, do y'all see the reasons why equities went bullish? Like how the markets was consolidate, like the dollar, what it was doing before he had those comments. We was like equities was over here, and the importance of waiting for candle closures, is highly important. Like waiting for structure to break, like what we had here. Instead of looking at candle closures, waited for the structure to break and look at how we retest that, had the breakout and then the retest candle, how that's important, instead of like, because we was going bullish. So imagine how many traders thought that the dollar was going to be bullish because of a rate hike. You know what I'm saying? So, but just us understanding that the markets has already priced that in, and he did not say anything to surprise us, made dollar get weaker after those headlines. So that's pretty much all that happened. So if we had a rate hike that was coming up, and the central banks for whatever currency that is wasn't surprising the markets, and then they just say, oh well, we raising it 50 basis points, then right away like that's going to be an initial spike up because the markets hasn't priced that in. So just say that Swiss franc, they have a rate decision, it's coming up tomorrow, but for the past 3 months we're not seeing anything from their central banks about raising rates. They're like, well, we don't know yet, until the day of we'll tell the markets what we're going to do. So they do a rate hike, then we expect a bullish move right away. But if they are telling us 3 months in advance that at May 5th we're going to raise rates, the markets is pricing that in already. So now it's like, okay, now it's the rate decision. So what's going to make me want to buy into the dollar, like buy into Swiss franc again? So then he's like, oh well, guys, we pretty much going to do what we said we're going to do. So the markets has to bring in some relief because markets can't go up forever. So it needs reasons to relief, it needs reasons to go bullish, it needs reasons to go bearish. But go ahead, guys. Any y'all all good? And girls.
Great session, brother. I'm all good, man. Thank you.
Yeah, you're welcome.
Oh, good, man. Thank you.
All right, good. Y'all all understand it, right? Like, if yo mama want to talk to you, like, yo, what happened with y'all be able to explain to your mama what I just said, right? That's what I want, you know. Like, I want y'all to say, like, yo, like, you and the motherfucker at work, like, yo, like, what happened last night? Y'all gonna be a nerd, like, oh, this is what happened. Like, yo, you gotta take advantage of this, you know. So, you know, because the more y'all understand it, the more easier it'll get.
I'm a little late to the meeting, but I'm gonna recap it, and then I'm gonna hit you up with some questions.
All right, bro.
Real talk.
Yeah, like, because the technicals is the easy part. It's just understanding the directions. And then, like, once we get that reversal for the dollar, and then we're gonna be like, oh, okay, like, it's gonna start making sense, because there's always a new segment shift that happens in the markets for reasons. Like, we have the overall bias, which, like let's go all the way back to, like, we had the COVID. That was the fear of the markets, risk off. So we had safe haven currencies bullish, we had equities dropping. What Jerome Powell came in the market, put in stimulus. So that was the overall market move. That was the overall direction. So equities went bullish, safe havens went bearish. Now we had they started fixing COVID. So now that was kind of more the segment shift with the vaccines came in. So that's when we saw equities started coming at the highs, and then we started seeing equities overall start to stall at the highs. Was once like pretty much at these highs. That's when the vaccines came in, and the same thing happened with gold. You know, when gold was going extremely bullish, and then when the vaccines came into the markets, that's when we pretty much stalled at the highs. So like now for this year, central banks is all looking to raise rates because the markets has that their currencies has been extremely devalued. So now the rates is coming in play. Inflation is high. So the overall movement of the markets is rising rates because of inflation is being dramatically high. Now we have a segment shift like that's coming into the markets, like geopolitical tensions with Russia and Ukraine. So now that sparked the markets, gave it risk off, made commodities go bullish. So that was the situation that we was dealing with currently. But now we have the rates, that's the overall picture. So the overall picture haven't changed. It's just that we can have these small, like these segment shifts that could change the markets in other ways. But if you understand the risk on and risk off flows and how the markets is going to react to these changes, you're going to be able to take advantage of it, especially at that first initial spike. The way that we tend to fuck up most of the time is because we're trading in markets with no directional bias. But once we get that directional bias, it will make our positional trades a lot easier. And then when we add it with our technicals and we can identify, you know, major support and key resistant areas, that's just more confluence to understanding. But we just have to understand what is impacting the market right now. So if I say what's impacting the US dollar right now, why is the dollar so freaking bullish? You're like, well, they've been raising rates this whole time. So that increases the value of the dollar. So now when we start seeing a sell-off happen, you know, we're going to say, okay, why the dollar is selling off? Maybe economic data is being negative. So bad GDP, bad PMI, maybe there was a high unemployment data, you know, stuff like that can like negatively impact the currency. But the dollar is bad because it's also a safe haven, because like if we have fears in the markets, you know, that's going to bring the dollar up. But if we say something like AUD, like just everything I said but with AUD, so why is AUD weak? Oh, they got COVID fears now, like they locked down one part of Australia. That's probably going to bring back AUD, but that's just temporary. But the overall picture is that they're raising rates, you know. So that's why like it's best for us to understand that. We all good?
Oh yeah. But I'm still gonna hit you over some questions.
Yeah, no problem.
Yo, I have a question before we get off. Maybe it's something you can answer. Obviously, you can, but
Yeah, yeah.
let's say with something like gold, right? And right now, gold is going supposedly going up per se, because of inflation, right?
Yeah.
But let's just say we get some news like that ceasefire actually is good, right? Now, wouldn't
Uh,
that bring down gold? And which one would you think, if it does bring down gold, which one would you think would be like the mover of that? Shall I say, like which one would be more stronger?
Inflation is what's going to be more stronger than anything else.
More stronger. Oh
Yeah,
wow,
like
okay.
I think like because what gold is a safe haven, like it's when the markets have initial fear, like people in like investors throw their money into gold when it's uncertainty. So I would look for gold in an uncertainty event to the upside more than the downside. So like the way we took advantage of it was when the Russian Ukraine war started. Then you look to buy gold right away. Like the
Right.
sell-offs could be from like due to like growth problems, and stuff like et cetera, like stuff that has to deal with growth. And probably the markets is pricing in because of the rates is globally coming in factor. But most definitely inflation would just be the number one thing you look at when it comes to commodities. Like yeah, like it could come into play, and then we look what happens with the dollar. It would gain strength because it's a safe haven. And then like say like they have a ceasefire, and then we start seeing price action come in play, and then we could probably take advantage of the sells once that come in play based upon price action. And then we look at the overall markets to how to react to it. That's why I have all these tabs. So say a ceasefire happened, I will expect the same thing. I want to see safe haven currencies get weaker. I want to see equities move bullish to see if it price it in first. But I would this like that's why I said like that can happen. There could be the temporary shift, and then we hit like a key support, like a higher time frame support, and then we continue bullish from there, because all it would take is a high CPI print.
Oh, I appreciate the beautiful answer, man. Thank you.
Yeah, no problem. Yeah, so like the way we take advantage of like geopolitical tensions is to the upside, is the fear side. Like gold is going to drop once, because the drop can already happen because we already closed below these lows. So I want to see like if we could get gold to come back to these high. If gold comes back above this support, like this area over here, oh gosh, it's most likely we're going to come all the way back up to these highs again. But gold commodities would really show massive relief if we start seeing a decline, actual numbers decline in inflation. Not because Biden is saying, oh, inflation is going to be in control. No, we have to see a print, like actual print. And then we're going to start seeing commodities like gold start declining. And that's how we take advantage, because, like, because I know a lot of us don't like we're not into swing trading, but look where gold is, man. This is all due to high inflation and geopolitical tensions. Like, look at the double top. Like, what if this was a 15-minute time frame? Y'all be in sales right now. But this all the way up here is probably like 3,000 pips. So that's the only reason. So once we get that, like, the actual confirm of that, man, like, yo, this is the potential, of gold. Is just we're not gonna break above these highs, and the potential is us retesting these lows. This is a massive, like, all the way down to 1,600. Like that's the potential. But let's see what happens with inflation. Because yeah, like it would be pretty dope. Like imagine how many like whales in the market is probably holding sells from these highs, not expecting price to go back up to 2,000, because they did say by the end of the year, they expect the rates to be at 2%. Raising rates it fucks up us individual people, because it's higher mortgage prices we got to pay for. Loans is going to be higher, the APRs are higher, so that's how it impacts us. But that's how they combat the inflation. So save up, guys. Yeah, like just take advantage, like this is what we take advantage of. So we once we get that print, but like also sometimes price action will give us the directional bias first. So we broke below that structure was like our key sign. So like if we start seeing gold start coming back, then we're gonna have to make a decision. Either we're gonna hold that. This could be a nice sell opportunity to take advantage of, to take these sell plays to the downside. But if I believe the print is next week, if that shit is high, man, like most likely we're gonna probably go up one more time. We're in May, January, March, April, May, June, July, August, September. Yeah, we still got a few months to go, man. And just because like whatever the Feds say now, like shit could change, man. Like everything could change. Like people could just don't want to go to work. Like shit could change with the labor markets in a few months. Like shit could change, and then what he's saying is not a concern could be a concern. And then now we know, because we go here and then we pretty much like identify what he feels, what is right, or wages is doing well. So once wages is going not his way, then we already know that's a problem. So this is why like these things are important. All right, guys, try to make it quick. I know Felipe want to watch this over. If y'all have any other questions, let's just don't hesitate to ask. Like that's how I got good, is just by bothering the fuck out of people. And like I said, like be good enough to where you could somebody ask you, you got confidence in it. Like, yeah, I got you. Like, yeah, this is what happened. Boom, bam, bam. All right, everybody. Have a good one, y'all fellas.
Appreciate you, dog.
Appreciate you too, brother.
Thanks again, bro. I'll see you, London.
See ya, brother.